Hi, I'd like to welcome Megan Thorp from Ignite Investments here. Ignite runs a fund of funds program, and she's the managing partner of the fund, correct?
General partner.
General partner.
Yes.
Fantastic. So, Megan, give us the philosophy over at Ignite. I know it's exciting times in the AI community, the high tech world, and a lot of things to look at. What is your particular focus?
Yeah. So I think as a whole for the organization, we're definitely focused on community building. And we see that in all aspects, especially at early stage entrepreneurship. When we're looking at Ignite investments for our fund of funds, definitely looking at the emerging managers and being able to capture some of the opportunities across specific verticals. So from an investment thesis perspective, the fund of funds allows us to have that broad scope capture across Silicon Valley based VCs in various verticals.
That's exciting. And you work with a lot of these companies. You get to see a lot of it as startups, correct?
Yeah, absolutely. So on our advisory side, we definitely get to work with a lot of really great early stage companies. And on the investment side, we're seeing a lot of incredible venture capital funds, both at early stages of investment for themselves as emerging managers, but also some of those more established funds, Fund 5, Fund 6. What's really exciting about this is being able to have such a higher level view of a lot of what's happening at the startup level. So traditionally, advisory services can only handle so many clients. And so same to be true with venture capital, right? You can only have so
Right.
many funds inside your portfolio.
Yep.
So as we look to have, 20 different funds into our portfolio, we end up seeing over 400 different startups.
Wow. I didn't
So
think about it. So there's a strategy behind this whole fund of funds thing.
yes, there definitely is a strategy, and I think AI is definitely a buzzword that we're hearing. Inside the valley, it's treated a little bit differently. I think there's a lot more depth of understanding of where AI can be useful, and so when we're thinking about AI as an investment, definitely looking at diving deeper inside of healthcare and trying to get a better understanding of how we can make better precision medicine decisions, how we can have more electronic health records, basically just improving the quality of life
Yeah.
for a system that's pretty broken. Same thing for different enterprises, right? So, how can we improve operational efficiency across these sectors? And I think that's what we're looking at in AI, not necessarily replacing humans, but optimizing the work that we're able to do in everyday life.
Right. Well, of course, investing is sort of a heavy focus here in the Valley, the venture capital community centered, here for tech investing. It feels like AI has also established its headquarters here in the Bay Area. And you being located there, it feels like you have a geographic advantage of sorts.
Absolutely. And so that's actually why we're investing only in Silicon Valley based VC funds is 3 times the amount of capital is actually invested here in our backyard in the Bay Area. And that's pretty normal in terms of venture capital, but the impact that we're seeing across AI, it's not just in one sector, we're actually seeing it across many. So the level of innovation, especially in the last year when we haven't seen a lot of successful fundraising for these startups. We're
Yeah.
still seeing a ton of innovation. Very exciting to be here at the ground.
Megan, what kind of criteria do you use? And I ask because everyone's got a little bit of a different formula, and there are so many companies and so much innovation, yet that doesn't necessarily mean they're going to be able to take it across the finish line to a successful exit and return on your investment. So how do you kind of evaluate which funds to go into, which companies to invest in?
Absolutely. Yeah. So we do only invest into the VC funds. And I think the interesting part of sort of going through the diligence process. It is such a qualitative process that it's so relationships focused, but we were able to create a diligence model that's specific to Ignite. And we have a heavy quantitative analysis, over 30 different key points to have weighted values to look at the way that these fund managers have either invested previously with their other funds or through their other angel or advisory work that they've had with startups. So this really allows us to get a better understanding of how they manage and take risk at the earliest stage possible. From a qualitative perspective, I mean, it's a 10-year investment. So there is a lot that's going to happen that's outside of our control. So being able to understand their decision making process and sort of looking at that from an entire portfolio decision. How do we hedge inside of our own portfolio, which is definitely one of my favorite things to work on.
Yeah. Well, being a former great athlete, Megan, how do you look at the sport of investing in terms of return? What I mean, I hear so many differing goals that people are looking for in their investments: 5x, 10x, 100x, kinds of examples, right? But in baseball, you get a hit 1 out of 3 times, you're headed to the Hall of Fame if you could do that over 10 years, right?
Mhm.
So, how do you look at kind of a return or IRR model?
Yeah. So the way we're looking at this is being able to achieve a 4x DPI, so total returns back to our investors. And it's kind of unheard of for a fund of funds to be able to do that. We have heard of it, and there is a methodology for it. So, really being able to optimize the amount of fees, we've actually cut our fees 50% in half from traditional VC funds. We've also been able to utilize our community and partnership
Right.
to help offset and create more value inside of the portfolio. And then, I think it all comes down to knowing that not every single VC fund is going to be a 10x, right? And so being able to find enough risk mitigation strategies inside of our portfolio that allows us to use our established managers to be able to hit those baseline returns as they've done historically, and then understand the decision making across all the emerging managers to be able to say, which ones do we think will be portfolio drivers and which ones do we think will be able to get, our 2x or 3x. But at the end of the day, it's true. Venture capital is very high risk. And so I believe that the fund of funds actually allows investors to participate at venture capital in a way that doesn't, it's not all or nothing. This is definitely an
Yeah.
opportunity for them to participate in the long run and be able to double down on some of those higher graduation rate companies.
And it still feels like a lot of money flowing into this economy, the Bay Area, the Silicon Valley economy.
Always, yes. I mean, the Bay
People
is
keep talking about Silicon Valley moving to other cities and the center, shifting to New York or things like that. But I know it's, evolving and spreading out a little bit, but this still seems to be the center, and a lot of money from other countries and, areas want to be here.
definitely. Yeah. I mean, I think this is always going to be ground zero for venture capital. Historically, we've always seen it happening here, and it's not going to go anywhere. And it's okay that innovation happens in other places. I think what we're seeing from a cultural perspective is that we're encouraging innovation and entrepreneurship a lot more from an academic perspective and also from an industry perspective. We saw a huge influx of consulting. So people are sort of going out on their own and thinking about different ways that they define work. And so in the Valley, especially, no one has one job. Everyone is doing 4 different things at the same time, which is why the energy here is untouched like anything else. And which is why there's so many opportunities for accelerators and mentorship and the encouragement of being able to think outside the box and create something new and not being afraid to fail or have to do something in a different way is there's nowhere else like it.
Yeah, it kind of is unique. I've been living here for far too long, and but I do acknowledge that. Hey, about the idea of working with companies that are here.
Hmm.
I've seen a lot of innovative companies in this group here that you brought for AI Infra. Are those typically companies you're working with on an investing side, a partnership side? I mean, yeah, they are exciting.
Yes, some of them are clients,
Okay.
especially the ones that we have spotlighted throughout. That's one of the value adds that we
Mhm.
have bringing them on. So, participation in different events, being able to help them on go-to-market strategies over an extended period of time, especially going into Series A. So, so yes, those are some of our
Yeah.
clients, and It's funny because what we're seeing is not just on the advisory side, not just on that investment side, but this sort of full circle relationship that we're having is being able to actually showcase startups that we're not even having conversation, like we're not even contractually obligated with, and sending those over to VCs that we've invested in, or
Right.
vice versa,
Yeah.
right? So being able to connect more dots, I think that's really the whole value of creating new connections.
Yeah, it's also a little bit of the Valley way.
It is the
So
value.
again, with Moneyball, this is kind of an early stage where you're at. You're in your first year, right?
Yes.
So year one of the fund, it's a little bit in parallel with where the AI industry is. I know it's been around for a while,
Right.
but technically, it feels like very early innings as far as AI and investment.
It
Would you
depends
agree?
how you define AI,
Yeah.
and I think that's what it always comes down to. Um, the utilization of, ChatGPT inside of all these upcoming solutions has just enabled different people to participate in the market. So I think that spurred a lot of, oh, you could do it this way, talking about different ways to set up the infrastructure, right? So it's this ripple effect of creating accessibility through AI innovation. And I think that's also why it's so important to invest at this stage, right? Is when you allow investors to participate at this early stage, what you're really doing is allowing them to disrupt existing industries or create new ones. And
Right.
that's essentially the phase that we're in right now.
Yeah. Speaking of the phase we're in right now, it is kind of tricky and a little frosty for IPOs, for exits.
Sure.
The M&A activity seems to be picking up, although I haven't read any data real recently, but it feels like it is. And then in terms of interest rates, we're seeing some movement there where they're dropping. Is that going to create a little bit more of a windfall for 2025, 26?
Everybody fundraising is hoping so. Um,
Yeah.
so yes, it should encourage investors to, have access to more capital that is not earning as much in these sort of safer income earning investment vehicles. We know investors are on the sidelines. There are a multitude of different reasons why they're on the sidelines: the U.S. election, interest rates, and you know, they don't necessarily need to be taking risk, right? Especially if they're locked up in other investments. But what we're trying to encourage and we're trying to share knowledge is that investing at this earliest stage of AI innovation, specifically in this cycle, because we've already sort of gone through one of these fundamental cycles, is that investing now in the next 6 months actually allows people to capture that next OpenAI, that next Perplexity, that next so and so and so,
Right.
right? Because we're learning what larger language model capabilities and use cases are, and the fact that we need smaller language models, the fact that we're seeing an uptick in data centers and at that sort of ground level. So we're learning.
Right.
And so with learning, we're encouraging investors that interest rates will always change, elections will always happen, and there's no reason to not participate in this, especially if you believe that innovation will impact our economy.
Man, ignite my portfolio. Is that your tagline?
It should be.
I think it should be. Let's
Okay.
run that by the boss. Well, it's exciting. I know you're getting quality deal flow. I know you've got some good management in place for this fund. So I imagine you're going to meet it. What is your thought for the next strategy as far as building out this fund?
Yeah. So the thought on the strategy for building out the fund is finding the best possible deals and presenting those to our investors. We've seen 70 deals in the last quarter of really great VC funds, but because we have our diligence model set up, we were able to do a very quick fail on at least 50% of those for a variety of reasons. But the idea is that we aren't afraid to say no.
Yeah.
And I think for investors to evaluate fund managers, we have different events. We have one next Thursday, in fact, about fund to funds investment strategy. And I think one of the best things that we could do is educate investors on how to properly do diligence on fund managers. Because the truth is, the way that they present themselves is if you don't have a comparison to it, how do you know to say yes or no? So you sort of sit on the line. And so we have enough knowledge to understand the things that we're looking for, but also in the way that we're creating our portfolio to balance each other and hedge against those bets. So if we're investing within healthcare, what areas of healthcare are we investing in that are going to not be as sensitive to different sort of regulatory bodies that might get rolled out in the next 4 years, and looking at that across different industries that might be affected by tax and so on. So
Gotcha.
yeah.
Gotcha. So, Megan, wrapping up here, is there anything that you'd like to share or any other thoughts about either, the Ignite fund or things you're seeing on the AI horizon?
Yeah, thank you. What I would want to say is just encouraging investors to have a conversation with us. I think we've been able to convert investors who were maybe on the fence about venture, maybe have done venture investing in the past, but it's not just an investment. It's being able to unlock access to Silicon Valley.
Yeah.
And that's why we do these events. We're here to show up not just as an investment vehicle, but also to say that the startups that we're working with, helping them with GTM, the VCs that we're working with, being able to help them operationally function stronger, to be able to get access to better deal flow at events like this, and the enterprises to be able to have, CXO roundtable conversations happening right now to understand enterprise pain points and being able to create solutions all the way through that level. That's ensuring success. And I don't know very many other investment vehicles out there that are that hands-on with their investments at different levels. And so highly encourage
Yeah.
investors to have a conversation with us. And if we aren't the right fit, I'm sure we know somebody who might be.
That's great. Well, Megan, thanks for spending some time with me here. This has been great. I think the Ignite Fund of Funds is off to the races.
I would say so.
And this Infra AI event has
Yes.
been fantastic. I know you're not an events company, but you are putting on a heck of a show. And, it's been great. Thank you.
Thank you. I appreciate this.